Hello, everyone. This is Terry with Futures.io, and as always, I would like to thank you for joining us today. It's my pleasure to welcome Scott and Bruce back for today's webinar, Order Flow Setups and Stops and Iceberg Confluences. This webinar is sponsored by Bookmap, and it will be recorded and posted on the Futures.io website within 24 to 48 hours. If you're watching this afterwards on YouTube, please do us a favor and give us a thumbs up if you enjoyed the webinar. And as always, please feel free to share, subscribe, and thumbs up the webinar. It really helps us a lot. For trading news, events, and information, follow us on Facebook, YouTube, and Twitter using @Futures.io. Also, please bear with us due to the COVID-19 pandemic. Most of us are working from home, so you may hear children or animals in the background. That may definitely be the case in my case. So now, without further delay, I'll hand it over to Bruce and Scott. And Scott, you'll get to pop up again to share your screen.
Okay.
All right, looking good. She's all y'all's.
Okay. Yep. Thank you. Okay, guys. So this is Bruce at Bookmap, and I just wanted to go through a few things, and then I'll introduce Scott here. Last time, or 2 weeks ago, we had a webinar with Futures.io, and it was more about just introduction to Stop Iceberg Tracker and MBO data or MBO bundle from Bookmap, and more formal discussion regarding all of that information. So the concept here was today. Now you have that background, and we'll link and give you the link here to that previous webinar. And then today we have professional trader Scott Pulcini, who uses this indicator and Bookmap, and get his insights of the practical usage of this data. Okay, so one other thing here, of a few different things. There's a PDF in the handouts folder in GoToWebinar. Click on that and you can download it. And there's all sorts of links in here. How to get this, how to get Bookmap, how to get the MBO bundle. We also now offer Rhythmic data from our marketplace, so you can get up and running with Rhythmic within minutes. And that's a new feature that we just had. You have Scott's contact information. I'll be putting all of this data into the chat periodically as well. And then you have all these market by order resources for further education on that. Okay, so one more thing. It was through June, this MBO bundle from our marketplace is 50% off. It's $89. It only works for CME futures and Rhythmic data within Bookmap, not for stocks or not for any other exchanges, just the CME. Okay, so it has to be CME instruments. After the end of June, the price will go up to $178 per month. Okay, so you will lock in that price if you get it before July. Okay, so the recurring subscription fee would still be $89 a month. So you might want to try it, see if this is something that you like, and if it's something that you do not like and do not want to use after July, then fine. Don't resubscribe or cancel the subscription. But at least you'll lock in that price if you want to continue to use it, and that would be a good discount for you. Okay, so let's cover this with Scott, and really happy to have Scott using Bookmap. It's fantastic. Scott's been trading for over 20 years, and then during the years of 2002 to 2005. He was responsible for trading about 10% of the S&P E-mini futures volume. So tremendous volume, must have nerves of steel. Scott now focuses on trading with both equities and futures. He's an expert scalper and has innate abilities to quickly read the order flow and volume within the price patterns. Without further ado, Scott, take it away.
Thanks, Bruce. Yeah, so this is my this is my third webinar on the SI indicator. I briefly touched on it prior to. Last one was only about 10 days ago. Some of the stuff might be redundant for some of you guys, but it's just an incredible. It's the most powerful thing I've ever seen in futures trading. So I've been around the block a few times, and I've seen it and done it when it comes to order flow. And having this information is incredible. It puts us on the same playing field as the big money, in my opinion. And a lot of examples that I'm going to show, it's from personal experience, right? So when I used to be, quick history. You can go back and watch. I put out many webinars with Bookmap in the last year. I've talked about my history, but used to be a very large trader, very large scalper. Very micro scalping, trading off the order dome, depth of market order book, and made millions and millions of dollars doing it. And then it literally disappeared overnight around 2005, and I couldn't make money anymore. And spent years kind of trying to reinvent my style to be a proficient trader, and I just was never anywhere near elite like I was. And because the algorithms took over the low volatility at the time around 2005, 2006, and I just couldn't make money anymore. So tried to just basically trying to figure it out for another 6-7 years, and I had to leave the industry around 2013 just because I could, I was okay. I wasn't good enough to support my family, put it that way. So I had to leave the industry in 2013 and go into medical sales. And then fast forward to a little over a year ago, Dr. Brett Steenbarger, who wrote the book on enhancing trader performance. I'm throughout that. So if you want to read about my history, I'm in that as well. He actually contacted me, and he's like, "You've got to check out this new software program called Bookmap. It's pretty incredible, and I think it's something that's going to get you back in the game." So the minute I brought it up and I saw it, I knew I was back. I knew, once just like I knew back when I first started making money, when I figured it out, and I knew Bookmap was the key to understanding what was going on in the marketplace, because you can't understand it by looking at a dome. And in my opinion, you can't understand it just staring at a bar chart either. You can obviously play technical levels, but my big thing is I want to know why technical levels work or they don't work, right? I don't want to just say, oh, that's trading percentages. I know I'm only going to be right 50% of the time, 60% of the time. I want to know why I'm wrong. And when you have Bookmap, you know why you're wrong. Most of the time you can see exactly why you're wrong, as far as the liquidity coming in the book, the orders coming in the book, that you can see in a different way than staring at the trading dome, which is fleeting and is not helpful in my opinion. And then when you add on the SI indicator, it's again, it's a game changer. I've said it multiple times, and I keep saying it. We'll cover this stuff too. I just joined the WeTradeDesk.com. We'll cover this more towards the end of the seminar, because I get a lot of people asking me, hey, are you going to do a trade room? But I'm in there live 3 days a week, kind of going over the setups, mainly the SI indicator. So I'll get into that towards the end when we're looking at other stuff. But so for those that are not familiar, the CME started putting out this, it's called the MBO, market by order information, and you can go right to their website, just Google CME MBO information, and they explain how this data is different than the old data, the MBP, market by price, where it's much more detailed as far as order IDs, and they're not bunching a bunch of orders at a price where you can't determine who's who, as far as order IDs kind of distinguish who's who in the order book. And then it also, the MBP, market by price, used to only have 10 levels each way of data that software vendors like Bookmap can disseminate. And most of the software companies besides Rhythmic still have that, right? And it's fine if you're 10 ticks away, either way, 2.5 points, say, on the S&P. But that doesn't give you the whole picture, and you want to know where liquidity is, resting liquidity, which we'll get into what that is in the book, and things like that. So that's very important when you're trading. And this MBO information has been out for 2-3 years now, and nobody has picked it up to as a data provider except for Rhythmic, which is absolutely shocking. I think that's all going to change here shortly because of how incredibly powerful it is. But for now, like Bruce said, you can only get it through Rhythmic. They have the if you go to the Bookmap site, they now have it in there. Just Google Bookmap Marketplace, the MBO, and then the Rhythmic is on there now as well. They just got that on, so you don't have to actually go through Rhythmic. You can do it through Bookmap, but you have to have Rhythmic to get this information. So I always get a lot of questions afterwards. Can I use this software, this software? No, it's only Rhythmic. It's the only one that provides the information. Again, I don't know why, but it is what it is, and we take advantage of that. So this basically just, again, you can find all this stuff on the website. Talks about icebergs, how, up here, exchange assigned order IDs are unique per order and consistent for the life of the order. So when they refresh, the same order ID is the original order. So what that means is, software providers like Bookmap write algorithms, incredible algorithms that disseminate that information where they can determine what are icebergs, what are stops, and things like that with almost 100% accuracy. And according to them, 100% accuracy. Again, I'm not on the algo side, but I trust them because what I see, it's incredible, like I said, and you'll see. So they determine, they kind of disseminate the information for us, and then they display it in Bookmap. So this again just explains to you what's different now versus old. And again, almost all software data, all except for Rhythmic, are still using the MVP, which is again not helpful. So that's just, it's good for you to understand. And then the other thing I wanted to cover too, for those of you who don't know what stops and icebergs are, I really hope you know what stops are if you're trading futures or any kind of markets, because you always have to have stops in there to protect yourself from something silly happening, as we all know, especially nowadays with all the market headlines hitting. You got to get out of your position and not take a 40-50 point hit in even the S&P or NASDAQ. So so the stops are obviously orders that are put in the book when traders want to exit a position. Some use it to enter a position as well, but majority of the high percentage of the stops are actually exiting of positions, in my opinion. And then the icebergs, so those of you who don't know icebergs, they are large orders that these big houses, big paper we call it, so like the Bank of America's, the big hedge funds, the big quant funds, they obviously trade millions and millions and millions of dollars at a time, and they can't go directly to the market with their orders. They can, but if they do, the market's going to run away from them, right? Just because, especially nowadays with the volatility, the markets are not equipped to handle huge size coming in as market orders. So what they do is they put their orders in the book as an iceberg, which is a hidden order. So they only have to display a certain percentage. Again, I'm not exactly sure the percentage they have to. I'm thinking it's around 10%. You can do research on that. But the point is, so say they have 1,000 lot iceberg that they want to buy. They want to buy at a certain price. When in the order book that you see, so this right here, this dome, where you see, we'll say like around, we'll say where it says 130. So you'll think there's 130 there, and then it'll come and start trading into that price, and there's another 1,000 behind it. So once the original 100 trades, then the rest of it is displayed as an iceberg order. So again, Bookmap can figure out based on the order IDs, because it's the same order ID for an iceberg for every order that trades, they can tell what are icebergs, what are stops. So that is incredible information for us as retail traders to know where the icebergs are taking a stand, where the icebergs are wrong, where stop runs are taking place. And we all heard, like, when you see a big spike, everyone always, they equate that, oh, that was a big stop run, that's all that was. But up until now, and I always thought this too, I'm like, well, how do you know that was a stop run? I mean, yeah, I guess when it snaps right back, it's a high probability it is. But with this information, you know if it's a stop run or not. And that is very, very important as we'll get into this, where, if you're long and you see a buy stop run and you don't see any buying after the stop run, that is a major red flag that you may want to exit your position as soon as possible, because there's nobody behind that buying besides the retail trader, right? So, and the other thing too is you got to remember that I've talked about in my webinars, I am a retail trader now, right? So my story is rags to riches to rags. So again, I explained it, algorithms knocked me out of the game. So I am not a huge, I used to be able to put on, 2,000-3,000 contracts at a time in the mini S&P. I'm about not even 1% of that now. So as far as how many I put on. which is fine. You know, right when I originally started trading, I was trading ones and twos, and this should be, you know, I talk about it in the chat room a minute as well, the trade room, where that should be motivational for you guys, where I didn't start out like, it's not like the firm I traded with just handed me thousands and thousands of contracts to trade with, right? I started out trading ones and twos, just like the majority of you, right? And then as things started to make sense to me, I traded twos and fours and eights, and all of a sudden I was trading hundreds and 200s, and then I can trade up to 3,000 contracts, right? So that's one of my gifts. One of my main gifts was I process information very, very quickly, right? And that was very good for scalping the dome, the order flow in the dome. But at the time I was one of the fastest in the world, but I was not as fast as a computer, right? So once the computers took hold, it was game over for me for that way of trading. So that style, it was gone. So I couldn't make money anymore trading that way up until obviously Bookmap. I forgot my second point there, what I was going to tell you, but anyway, so this is, this is basically just showing you where these icebergs and stop runs are, and when they occur, and you can kind of start to determine what you want to do when you see them, and it just gives you a whole nother level of transparency as a retail trader, knowing what the big money is doing, and it's putting us, you and I, on the same playing field as the big money, right? Because you're seeing what the big money is doing, and that is, I can't tell you how important that is, right? So it's like everybody knows how to trade, off charts, most people bar charts, ranges, things like that. That's a lower high, lower low, and then using all your indicators, and all that's fine. When I tell people, when I'm explaining what I do and how I trade, I don't expect you to trade like me, because you won't be successful. You have to trade with what makes sense to you. But what this information does, I don't care what you're using. I don't care if you're throwing at a dartboard. If you have this information, it's going to enhance whatever you're using, period. End of story. There's no question about it. So I'm not telling you what to use. I'm going to show you towards the end is what I'm using as far as levels and things like that to determine, and then using Bookmap to confirm. But you can do that with anything that you're using, right? You can use it with bar charts, Elliott wave, Fibonacci, whatever you're using, and you want to see who's actually playing at those levels. Because if the big money's not playing at those levels, then why do you want to be playing at those levels? That's the way I look at it. So we'll get into this, and then I'll answer some questions at the end here too, or maybe in between, so I can stop talking for a little bit as we get into it. But so the other thing too I want to cover, this is actually brand new for the webinars, is Bookmap also has what's called a liquidity tracker. So there's four main things. The other one I haven't even learned about yet, just because I've been overwhelmed with and excited about really learning what the stops and icebergs and how to use it. But there's four main things. The ones that I use right now are obviously the stop and iceberg indicator, and then liquidity tracker. So liquidity tracker, I even have people that I mentor, or people in the trade room that I'm in, asking me like, oh, I don't understand it. And when you look at it, it's kind of confusing. But when I explain this to you, it's pretty basic, right? So on this chart here, blue are icebergs, red or orange. Again, I'm colorblind, red, green, color deficient, so I have to change my colors. Your default settings will be different than this when you download Bookmap, and I'll go into my settings at the end. But you will have different default settings, but you can change them, right? So I have to change them for what I can see. So anyway, the blue are icebergs, the orange or red, whatever color this is are stops, and then the black is the liquidity tracker. So to get in the liquidity tracker first, all this is showing you. So when you look at this market map, right, you see that they call it the heat map. So all this is showing you here is what is in the order book here, right? So again, I used to be an expert at just trading this, and it just doesn't. If you stare at these numbers long enough, I don't care how long you stare at them. In my opinion, nowadays, you can't make any sense of it most of the time, right? So it's very fleeting. Everybody knows it, right? So if you see 1,000 lot and then the market comes up to it, it turns into a 10 lot, then it turns back into 1,000 lot. It's like nothing is real, and when you're watching that, it's like you never know what's real, what's not. Why Bookmap is so incredible is it's showing you, one, relatively what is a lot of size in the order book versus not, right? Based on darker, blackish versus heavy, red orange. Red orange just means there's more orders in the order book at that price, right? When you see stuff like this, where it just comes and goes, comes and goes, comes and goes, like you see out here. All this is algorithms, right? This algorithm is putting in orders, pull on, putting in, pull on. That's important to know whether liquidity has been there for a long time, which I think I have a couple examples of that. Yeah, so I'll show you in the next slide. When you see liquidity in there a long time, that means those orders are real, in my opinion, meaning they're willing, that's been sitting in there the entire day. If something happens, if a news story comes out, they're still willing to take the order, right? Or take a market order into those orders. That gives you information that's important. When you see stuff like this is just confusing, right? This is what the algos are meant to do. They're meant to confuse the retail trader and whipsaw you to death. When you sell, they run it up. When you buy, they run it down. I mean, everybody could attest to this, right? So having this information, knowing where the real liquidity lies in the book, knowing what liquidity, as far as relativeness, which we'll talk here about in a second, it's going to help you make better decisions than getting tricked and fooled by the algorithms, right? So again, my whole driving force nowadays is to help the retail trader fight back against the algorithms, fight back against the big money, because you got to remember, I was the big money and the algorithms knocked me out of the game. So I still have, that was 15 years ago, right? I still have animosity towards the big money, the algorithms, and being a retail trader now, it pleasures me, it brings me happiness to show you guys this stuff, to get you on the level playing field, to make much more educated decisions and fight back against these algos that are, at one point, I mean, I'm sure you've seen the statistics. It was like, 75 to 80% of the market activity is algorithms, right? So this is just helping us fight back. And the more you can learn how these games are played, the better trader you're going to be, period, right? It's just, and it's not adding information. It's not like adding a bunch of different indicators to your chart where you're confusing yourself, right? Where you can't make a decision, where they say paralysis by analysis, where one indicator is telling you to go long, another indicator is telling you to go short. No, this is different, a different type of information that's just going to help you determine with what makes sense to you if it's a good area to enter the market based on what you're seeing. And I'll get into that. So this liquidity tracker, we talked about liquidity. So this is like liquidity in the book that I was talking, that's just resting the whole time, right? So unless you're looking over here at the order book to try to discern what is, okay, so this is dark red. Well, what is dark red? It's all relative in different markets, right? Dark red in soybeans, like this is a different quantity than dark red in the ES, right? So what this helps you determine when you start seeing, especially when you see the algos going haywire like they are here, I call this the Christmas tree. And if this was live, I would zero in on it. Actually, I could do this quickly just to show you here. This is a live market, or was. So you can see when I zero in on this size, I mean, look at this nonsense, right? So, I mean, this is what I call a Christmas tree. So you can see this, these are all algos. All this stuff that's like all these different really fun colors to look at. It's not really fun when you're trading, when they're whipsawing you to death, right? Actually, that's in copper. This is the E-mini S&P, which is just, I mean, look at this just glob of nonsense, right? This is not something that is helpful for a retail trader or any trader unless you're the algo doing it, right? So, when you get Bookmap, you can zero in as far as you want on these orders, which is another really cool thing. But you can find out to the exact tick what price is traded there, right? If you look down here on the bottom left, volume 31 and 3103, like this was here. This was a two lot. You can start to. I don't recommend looking at it like this because you might as well just look at the dome because you're just going to be confusing yourself. But I just wanted to show you, like, this is what algos do, right? It gives you a headache and it costs you money. So this liquidity tracker is just showing you how much liquidity is in the book, both sides. So let me show you this thing here again, just so you can see what this is. So I use the imbalance, right? So when you go to settings here, you can see what's on the ask. You can put it in your chart and you can put it here. You can see what's on the bid individually, right? Now this, again, I might as well be looking at this. This is not helpful for me. I can't make decisions looking at this. I don't know who can. And then all this over here is what's represented in graphical form. I don't need to know the bid and ask. I need to know the difference for me, right? And that's important to me. So what I do is I take this stuff off my screen and then I just see the difference. That's the imbalance, meaning the difference between the offers in the book and the bids in the book, right? So, and what my settings are set for, and I'll go over the settings at the end as well. Clicked on the wrong thing there. So you see here, my market depth, and you can change this to what you want. I'm looking at 10 ticks either way, right? Because when you're looking at the liquidity, you don't want to be looking at 50, 60, 70 ticks either way, because that's not helpful. I want to know, in a condensed area, who's winning, who's losing, who's bidding more versus who's offering more, right? And again, you can tell a little bit by this, but again, when you look at this, you can't tell what the difference is. I can't, right? So it's like, this is where this helps you. So we'll get into some of the divergences here as my examples for the liquidity tracker, but here what I'm showing is, so you can see all morning, this is today. So most of my examples are from today. I would have done this live if we were done a little earlier, but I like to show very recent, within a day or two, examples, just to show you guys that I'm not like cherry picking from 2 months ago, a perfect setup, right? I mean, this is how amazing this is. You will get setups all day long in every futures market. I mean, I follow 18 futures markets, and it's the same games in every futures market, and that should be uplifting for you guys to know that, right? That once you learn the games, you can apply it to any market that you're looking at futures wise. For the SI indicator, remember the SI indicator does not work for stocks; it's only for futures. So, what this liquidity was showing me today. Every time we rallied, it seemed to just kind of pull back, which most people know is a range, right? Well, why were we not doing the usual rip up higher, because nothing's wrong in the universe according to equities, right? It's just every day is just sunshine and rainbows, nothing's wrong. But you can see here today, so the zero line, I don't know if you can see it on here, but it's just basically in the middle here. So the zero line, meaning zero would be an equal number of bids in the order book, so bids, versus offers, equal number when it's at zero, right? Total sum. And then if it's above zero, that means there's more bids in the order book than offers. And if it's below, there's more offers in the order book than bids. Okay, it's pretty simple once you understand what this is showing, right? So why this could be helpful, and I don't use this all the time. I don't use it like I use the SI indicator, but it's helpful like a day like today, right? So every time we started to look like we were going to rally, I mean, look at this thing. This thing was below zero the entire morning, all morning. Look at that. I mean, this tells you something. This tells you on rallies, and especially if you start getting signals, which I'm going to show you in the stop and the iceberg stuff. This tells you on rallies, you're looking to find places to short if that's your thesis, meaning the orders want to be selling all morning. Right, this barely poked above zero all morning, meaning there was barely more bids in the order book than offers. That is very telling. That gives you a way to develop a thesis on what's going to happen for the day. And then we ended up. This is the slide here. This is what I just showed you, right? So I didn't want to get ahead of myself with the divergence stuff. I'll get back to this in a second. But so this was what I just showed you. Then there's the big break. We broke down, and then all of a sudden now everything's above zero, and that causes the big move upward, right? This just alone is this is why I took the stop and iceberg stuff off, so I didn't confuse you. But this alone, you can see, look at the difference. When you get whipsawed or the market turns on a dime and runs the other way, you're always thinking like, what was that? Why did that happen? You sit there and you want to break your computer screen. This is telling you why it's happened, right? Why won't we rally? Oh, because it's offered the entire day. There's more offers in the book than bids, right? And I'm going to show you the divergences here soon, but in a second. But hopefully that makes sense to you on what this is and how you can use it to your advantage. And again, I'm not even talking about the stop iceberg stuff yet. So this was soybeans. Same thing. Negative all day long, right? All day long. What this was, and we'll get into this again, this was a stop run. This was a bearish signal, which you're going to learn. So how could you use that? You can use that knowing, okay, I know this liquidity tracker has been negative all day, meaning the bias is on the sell side. The minute I see a setup on the sell side, I'm in. I know, because I know I've got the big money behind me as far as in the order book, right? The limit orders. That's good to know. This could have been an area you look at. It could be the top of a range that you're looking at. It could have been a longer term area. When you see it go up here and we're still negative down here, that that the sellers are more prevalent, or they want to sell more in the book, right? So meaning they're on your side. You always want the money on your side, right? You don't want to be buying if these guys want to be selling, right? Until you see a change, like I showed you here, right? When you see this flip from under zero to above zero, now you can be a buyer. So this is basically just an example of an actual setup, which again we'll get into. The stop, I call this the Dumb and Dumber setup. I have names for all my setups, and I'm also coming out with a course. It should be out in the next few days. I said this a week ago, but I've been busy. That's going to show you all of these setups, or all of the, you're going to know all the thresholds for like 18 or 19 futures markets. Thresholds meaning stop icebergs obviously are more meaningful at certain volume numbers in different markets, right? So a stop run of 125, which you see right here, is a lot in soybeans. It's nothing in the mini S&P, right? That's important to know when you start to base your trades off this stuff. Hey, is this a lot? Is this a little? So again, I'm coming out with a course that you guys can get to help you, and then my actual setups. And so when I refer to I have labels for them, which are pretty funny that I've made for myself. That's what their labels are in the educational product I'm gonna put out too. So this is the Dumb and Dumber setup, which I'll get into. So this is again where it flipped, right? So we just went over this, sellers, and then as soon as it flipped, now look what happened, boom, right? So when you're sitting here, you're short today and you think you finally got it, you finally think we're gonna sell off for the first time in 3 months, and it does this once again, you know why, right? This is one of the reasons why. Because the thing is, you're not always gonna get a setup, and that's one of the other reasons I didn't put in the stop iceberg indicator, because there was nothing on there that was meaningful. So when you don't get that kind of information, that doesn't mean you just sit here and hope we keep going down. If you have this information, if there's nothing showing you in the stop iceberg that we may turn, you can use this to be like, okay, I got to be very careful here. I see for the first time today, there's more bids in the order book than offers. That is telling, and it'll give you, so you're not blindsided by this move, right? Again, this information is going to save you and make you a lot of money, right? And this is nothing compared to what I'm going to show you with the stop and iceberg. So that is, here's one more instance. Oh, so this is a good divergence. This was from 6/16, 2 days ago. So what this shows you is in the same areas what's going on. So you can see, when we were in this area earlier, we're flatline. Again, this is really condensed just because of the relativeness of everything else that was going on, the stop runs and everything, which I'm not covering on this slide, but just liquidity tracker alone, you can see when we were in this area, price area before, 09 to 05-ish, it was pretty much flat, right? There was nobody winning, meaning there was the same amount of offers as bids in the order book. Then look, once we rip up, look at the spike. I mean, over 1,000, close to 1,000, all in the same areas here. So this is what most look for as a divergence when you're looking at other things, like when you're looking at the ADD, advanced decline line, you look for divergences. You look for divergences in NYSE tick, right? I'm sure all you guys are familiar with most of these things with divergences. Well, this is a divergence with the liquidity tracker. This is important to know. So when we come back in this area, all you got to do is look down and say, wait a second, something's going on here. There's a lot more bids in the order book than the last time we were here at this price. That's telling, and then see how it held, and then gone, rips up, right? Holds again here, rips up higher, right? So yeah, I mean, you could be looking at the order book, but good luck trying to use your calculator figuring out what the totals are and everything else. Even looking at this liquidity here is basically this here for 10 levels up, and wherever the market is, it's showing you, this liquidity tracker is showing you 10 levels down, 10 levels up, 10 levels down, 10 levels up. So again, when you see all this algorithm nonsense, you need to know, okay, because I can't tell the difference between this and this and this over here. But when you look at the liquidity tracker, you can tell there's way more bids that are resting in the order book that are willing to buy, right? So, and again, for quickly touching on, so the bubbles, for those of you who are brand new to Bookmap, the bubbles are actual market orders, right? So this stuff in here are limit orders. Limit orders meaning they're putting it at a price wanting to get filled. Market orders are aggressive orders that are going to market, right? So this is showing you limit orders in the book, same as that's what this is. And then the bubbles are the actual market orders, blue being buy, red being sell, meaning blue, they're taking the offer at the market price, wherever we're trading, right? So blue right here would mean someone's actually taking this order right now, this 54 lot, you'd see a blue bubble. Red means they're hitting it. And again, I have the default settings are red-green. When you get Bookmap, you can change that. I'll show you my volume dot settings as well. I have to change it because I'm colorblind. But I just wanted to go over the difference between market orders and resting limit orders. And all Liquidity Tracker is showing you is resting limit orders and the differences between areas that were prior. So hopefully that is clear. All right. Any questions, Bruce, while I take a drink? Cover quickly. I mean, I'll cover most of it at the end, but if there's any like just general that people aren't getting it, let me know.
Yeah, so no, most have been rather technical here, and I've been busy, very busy typing away here. But there are some questions here, so hold on just a second. Let me find those.
Okay. Once we get through this, then I'm going to go into the Stop Iceberg stuff.
Okay. Let's see, you talk about massive negative imbalance in the liquidity tracker today and the week. The numbers are many orders of magnitude higher than usual. Or will you talk about it? So yeah, from today's action, I guess Ian is asking if you saw something. I
mean relatively based on other days?
Yeah, or just I guess based on the day.
Right, based on today versus other days, I'm assuming.
Yeah.
That I cannot answer. Again, I don't use a liquidity tracker that often as far as studying it so far. I mean, you got to remember, this stuff is brand new to me too. I've had this information for like 2 months, two and a half months. So it's all of my energy has gone into the Stop Iceberg stuff because it's the most powerful. This stuff could be helpful. It is helpful at certain times, but not like all the time with the Stop Iceberg indicator. So I don't know the exact. I think I know what you're saying. You know, is it being negative 500 all day long? Whatever this value was, it was probably close to negative 500 all day long. In the order book, is that a lot versus prior days? I can't answer that. I'm not going to just throw an answer at you. But when you get this, that's some research you can start doing. There are so many different things that you can come up with as far as, your own indicators, stuff that, just things that you're going to come up with your own ideas and your own patterns as well. So that should be exciting for traders too, where you can get in here and you can start seeing, you can come up with probably 10 different things and what will trigger a trade for you just using this tool. Again, I don't use a liquidity tracker that closely where I can tell you yes or no on that one. Hopefully that made sense. Anything else?
Yeah, let's see here. Most are. Yeah, another question.
When you see thousands, that's a lot. like the other day, if you see thousands bid, that is a lot in any market, especially even the S&P right now because it's it's so volatile and the size just isn't there.
Right. Okay. Ian, that's weird. Your numbers are showing much different or in the millions. It just doesn't seem possible. Perhaps you had Bookmap open for a long time and it's aggregated over time. That's the way the indicators work.
Or it's looking at the CVD. It could be looking at CVD as well.
Maybe. But just remember, like what Scott is showing there in that black line there is it's the difference between what is on the bid and what is on the ask. So that spike up could be many different things. It could be like a heck of a lot more on the bid. It could be just a heck of a lot that was pulled on the offer, or some combination of those. So it's the delta. Yes, that is correct.
Right, delta, exactly.
Right,
one more then, because I want to get into the real stuff, the meat. I mean, this is real too, but it's not as powerful as the other stuff.
Okay, yeah, there is some, Robert's asking about how you can demo getting into a trade. Yeah, most of these guys, before I hand it off back to Scott here, a lot of the questions that you're asking, all these technical questions about it, it can be answered in the PDF that's in the handouts folder there. So you can download that. The only information that is maybe new here is just reiterated again, the $89 cost for the MBO bundle is good through the end of June of 2020. Okay, so after that, it will go up. So it's 50% off right now. After that, it'll be 178. But you can lock in that recurring subscription price. Okay, so you know, try it. Basically, it's like give it a shot. Try it in June. If it doesn't work, then you don't need it. Don't resubscribe. But if it offers you something, then you can hold on to it, and every month moving forward, you will lock in that $89 price. Okay.
And I could promise it will offer you something.
Okay.
100%. Again, it's the most powerful thing I've ever seen in futures trading, bar none.
Wow.
Again, like I always say, you know, you got to remember all these prior I've done like, you know, probably 8 Bookmap webinars, 7 or 8. Up until the last 3, it's been just on Bookmap and liquidity. I didn't even have this information, and I thought that was the most powerful thing I've ever seen, which it was. But this is like that on steroids when you know, this information here that I'm going to show you with the stop iceberg. So if you don't find use in this, then you might want to find another profession, because this is what's really going on in the market, right? And when you can use this to your advantage, you will be a profitable trader. You know, once you start to learn how to use it, in my opinion.
Okay, so yeah, just Homera, the June is half over, of course, but we've offered this discount, and we extended it a couple of months already, so it's already been 2 months of extension. We just want to make sure that everyone gets their chance to get this at this half off before we raise the price, so that you know, in support or wherever we're not like, you know, you guys didn't offer it for very long and I missed it, whatever. It's like, well, look, we had it for, you know, several months, so you could lock in that price. Anyway, sorry, Scott, go ahead.
Okay, cool. So now I'm going to show you some examples of the stop iceberg indicator, and I've explained what stops and icebergs are. So, you know, again, these are almost all today. This next slide yesterday, but other than that, these are all today's examples, right? Just to show you this happens all the time in all markets, right? Again, the values will be different. What's important, what's not, but overall, the generalness of it's consistent across all futures markets. So as far as the setups, so again, the blues are icebergs, the red or orange are stop runs, right? So this is an example today. I'm just going to go over raw data, not using anything else that I look at, just to show you, you know, and again, you can have your charts up from today and say, oh, wow, yeah, that's why that bounced off that level, or, oh, yeah, that's why that stopped at that level. This is why, right? So you get to move down. So I'm on Pacific time, so this is right around 9:30 Central. So you see the sell-off here. There's nothing going on in the icebergs. When we hit right around 3090-ish, 3091, 3090, you see a large amount of buy icebergs come in the book, right? That's what this spike is. And I put these in. You're not going to get these actual levels here, but you can just reference this. This is always in here. It'll show you. So the blue is obviously the stops. The icebergs. And then the orange over here are stops. So you can determine, you know, you're not going to have these exact numbers that I put in here myself just to help people understand. All you got to do is look over to the right and you can see, right? So, you're not going to know the exact number. You can if you hover over it. Let me show you one more time quickly. So this is the regular market. There we go. So if you hover over it like this, so if you look at the bottom left there, it shows you. Granted, this is really condensed. I smushed up my screen as much as I could, but it shows you 583 buy stops because it's above the zero line. Buy stops fired off toward the end of the day. Earlier, this was where are we at here? 1,000. It was actually more than that because but this is where I'm going to show you my example. But my point is, you can figure out how much it was. You're just not going to get these quantities like this. These are mine, okay? But you can always reference the scale here. So when we came down here, there were 720 icebergs, and anything over $600 or 700 icebergs is relevant, meaning you want to pay attention, meaning it's probably going to move the market one way or another. So icebergs, I'm going to refer to as paper, right? Paper is the big money, like we talked about, the hedge funds, the quant funds, the big banks, right? So majority of the time, from my experience, from my research, icebergs are right, meaning when they take a stand buying, again, above the zero line, here's the zero line, Above 0 is buy icebergs, below 0 is sell icebergs. Most of the time, I want to say over 60% of the time, that's high percentage in my view, the icebergs will win, meaning they're going to stop the market. And you can see right here, this market was in free fall until it ran into an iceberg, and then whoever was selling was thinking it was a 100 lot, or say they thought it was a 70 lot, and they start selling into it, think they're going to push it lower, and then there was 700 behind it, right? So it's just, I'm not saying that's exactly how it went down, but to help you make it more elementary of what's happening, think of it that way. So sellers were engaging, sellers thought they were going to push it all the way down here, and then they run into a wall. Consider icebergs like a wall, right? So this was a wall of buy orders that were not visible in the book, that were like, surprise, when the market came down here, it was a nice little surprise for these sellers, right? So it's like they're hitting it, they think it's only a 70 lot, they sell 70, there's another 70 there, you sell 70, and all of a sudden the whole iceberg, now there's 700, right? So it gets filled, and you can see that's the exact stopping point of this move. And then we rip up, 16 plus points straight, right? Then what happens is, as we come up here, now this is a stop run. Again, stops relatively, in my research, my opinion, from watching this day in and day out for months and months, stops are usually wrong, because stops are usually the retail trader, the uninformed trader. The icebergs are the smart money, as I refer to them in my course and in the trade room I'm in. This is smart money, this is dumb money. And I'm not making fun of anybody retail trader wise, because I am the dumb money now too. So I'm the retail trader too. So don't be offended. I'm just trying to help you guys distinguish the difference, right? When you can distinguish the difference, you can determine areas whether they're legit or they're not legit, right? So when you see an iceberg fire off at 30.90, this area is legit. Some big money wanted to participate there, and they wanted to hide it on top of it, right? That's important to know. When we ripped up here, we ripped through this level right here. That was a 1,146 buy stop orders, again, because it's above 0, buy stops firing off. Why is that important? That's important because that's the retail trader, most likely, almost all of it, and there was no follow through to the upside. You will get occasionally a stop run, more than occasionally, I'd say, again, like I said, 3 out of 10 times, where it'll keep going. Well, that's fine. That means there was real buying behind it. But certain setups you're just going to be looking for. So for instance, if you're looking for a short and you're waiting, then you see this and you see it fire above, and then it's immediately below, then you start seeing the selling engage, and it didn't continue, meaning there was no real buying behind it. Real buying meaning big money. There's your short. You get short the minute you see a market sell starting to come in by the red bubble. You put your stop above it in case you're wrong. You can also rely on this resting liquidity too, so you can put that above there. And then now you got, this turned out to be another 15 points going the other way. So this is just raw data where, and I say it all the time, I'm convinced that you can get Bookmap and trade just off Bookmap alone and be a proficient, profitable trader, just like I used to just trade off the order book alone. It was very rare if I even had a chart up back then. That's how engaged I was in the order book, meaning, I had so many people tell me, and that's it, that's it, it's that simple. It's that simple. Just like when I used to trade off of this, it was that simple how I would judge how the orders were coming in, again, because I had fast mental processing skills. I can tell just by the way they were coming in, that was my gift, whether it was going to stop, whether it was going to keep going. This is what this affords you guys. You can know this now. What was this real? If you're looking to get long, you see this and it goes right below. You're like, well, wait a second, I'm not buying here. There's nothing behind it. This was the dumb money. Again, I'm referring it to dumb money because it's the uninformed money. So again, this helps you stay out of trades. This helps you get out of trades. It helps you take profit. It helps you understand where you put your stop. You can control your risk too, because this is a very defined area, and it's pretty small, where if it comes back above here, you stop out, you lose 3 points. If you're right, you make 15, right? That's what makes a profitable trader, is the risk reward, right? Guys that are trying to make money trading, 1-to-1, meaning I'm risking 3 to make 3, good luck, right? Unless you can write algorithms, good luck on that, because one, especially in these markets, you're going to get chopped to pieces. 2, your commissions are going to knock you out of the game on top of it. So to be a profitable retail trader, you have to be able to take, again, unless you can write algorithms that are fast paced that you can just set and let go, you have to take multiples on your risk, meaning you're risking 3 to make 15. So that's 3 points to make 15 points. You're getting 5 times your risk. that's what makes profitable traders. There's this misconception out there that, great traders make money every single day. That's not the case. Great traders make a little money, lose a little money, make a little money, and then they have outsized days, right? Where they catch the 20, 30, 40 point run. And this is what this allows you to do by knowing these areas. This is how you're going to be risking a couple points to make 15, 20, 30, 40 points, right? And that's what makes profitable traders. So again, all this information is just raw stuff, Iceberg right now. This was crude. This was at the end of the day yesterday, and this was in the June contract. The July contract, which is rolling. It's already rolled. So to see, again, the different markets have different thresholds as far as what's a lot. So in the E-mini S&P, 720 over 600 or 700 is a lot in S&P. In crude, over 100 is a lot, right? My point is, you don't want to get confused. You don't want to bring up a chart like this and then do something like this, and relatively this is just showing what's on the page here, thinking this is a lot, right? Just because it's a spike. This isn't a lot. This is 50, right? My point is, and I've had people ask me about this, and that they're confusing because they have it too zoomed in. We're like, oh, look at this big iceberg here. It was big relatively to what you're looking at on the chart here, but it wasn't big as far as thresholds where you should say, okay, I'm interested. This is not enough to be interested either way, either on the stop side, even though it's a spike just from what you're in this area that you're looking at. And hopefully that makes sense, right? So even though this did hold, right, the selling came into this buy iceberg and it did hold, retested and then gone. My point is, you're going to lose more often than not if you're just relying on smaller size. You want to see the outsized, right? You want to see, and again, what's also great about this indicator, you're only going to be seeing 3, 4 signals in a day, right? Where it's, outsized, huge, like this was 1,000, 1,100, whatever I had on that, my example there. I can't catch it right here, but anyway, you're only going to have a few icebergs that are meaningful, a few stop runs that are meaningful in a day, which is good, right? You don't want to have something that fires off 40 times a day. It's not that relevant. What's relevant is when you see these huge spikes into an area that is already of interest to you, then you can take a trade and have the odds extremely in your favor. So that's the whole point. So this was a buy iceberg. So you see the market coming down into it. This is right at the close, but it ran into 194 buy icebergs, which is a lot in crude. And you can see that was right here. Oh, okay, I'm sorry. So this is the opposite example. This is where paper was wrong. Like I said, paper is right the majority of the time, but they are wrong sometimes. So I know some of you are saying, well, what is that? How does that help me? I want to go with paper. Majority of the time you do, but all you do is you judge by how the market reacts at that level to decide, is paper going to win? Is paper going to lose? Either way, the area is meaningful, right? Because a lot of orders transacted there, it's meaningful. So this was an instance where paper tried to step in front of this and they got run over, right? This is where they stepped in front, boom, right through it. And you're going to see this all the time, this exact setup where it runs through an iceberg, then it'll retest, then it'll fail and go. What this is, and again, I speak from personal experience, and it may not be the exact reason, but I know how I used to react when this would happen to me, right? So say this is E-mini S&P and I have 2,000 bids here and it just runs me straight over and it's 4 points in my face. Again, pretend this is the E-mini S&P. Then, so now, I'm not at my puke threshold where I got to get out. I'm in pain mode where I'm like, oh my God, please come back so I can scratch this trade, right? We all know the feeling whether you're trading a 1 lot or 1,000 lot. So what you see over and over and over again are these icebergs that get run over, and then when it retests, this is their opportunity to try to scratch some of their trade that they were just wrong on. And then when you see the sellers re-engage with, they were already re-engaged all the way up here. Sometimes you'll see blue like this, and then you see the red. This is just red, 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 red. But when you see it start to turn over, that's what you get in. You sell here, put your stop above here. In this instance, you had the luxury of having actual resting liquidity and offer liquidity in the book over here. So don't pay attention to this because this was at this point in time where you see this. This is why this order book, because of the market was closed. At this time, there was heavy, you could see here with the liquidity tracker that we were just covering, this liquidity is representative by right here. This is the same stuff. My point is, you had 2 different things of confluence in your favor, and this isn't even counting charts, right? This isn't counting indicators or moving averages or anything else you use. This is just pure volume where icebergs got run over, retest, fail, retest fail, gone, right? After hours, after crude hours, the pick closes at 1:30 p.m. Eastern, you're catching this, again, this is Pacific time for me, so this is 11:30. You're catching a 40 tick move if you saw this and played this area with very little risk. You could have got in the minute this turns, you're in at 37.98, you're risking up to 38.04. You're risking 6 ticks to make 50, right? That's what I'm talking about. You can control your risk by knowing where these areas are. So this was an instance where the paper was wrong. Again, they're not right every time. They're right the majority of the time, but not every time. And it behooves you to know when they're wrong, because they're going to have to puke out that position. And again, because this is what I used to have to do. So this is for, this is very generalized stuff I'm showing right now. So obviously everybody knows what a trading range is, a bar chart trading range, right? But what people don't know is why. Okay, is this range different from, if I had another range I was showing here on the chart, why is this area different than another one? Why did this break out versus break above, right? When you have Bookmap, when you have the SI indicator, you're going to know why. So this is this, right? So now look at this. So I'm not even looking at the liquidity right now. So this is the resting liquidity in the book. I don't even have a liquidity tracker up because I don't want to confuse people. I want to focus in on the really powerful SI indicator. So in that range, in this range, up and down, up and down, up and down, we had a stop run here that kind of held, another stop run, failed, right? So meaning there was no real buying behind this at the top of the range. There was no, what was the start of the range? There was no real buying, and it was in the liquidity. Turns around. I'm not saying this is a signal yet, right? It could be. You can say, hey, this is, but I'm using it as a range example. But you can say that this is one of your, and again, this is one of my setups where it's called the Dumb and Dumber, where the stop run fires off and it's immediately below. You can short here, risk above, and you have liquidity line, and you can use that as one of your trades, right? And you actually would have been in it for the whole move down. But I'm using this as an example for the range trade. We'll get into the Dumb and Dumbers and stuff like that, the setups in a couple of slides. So for the range, now you're watching this. So why is this important? You see a buy stop run, fails, comes down here, runs into an iceberg. Significant iceberg. Again, this was only about 600. I don't have the quantities on here, but it was like 500-600, which is again, we want to see 600 or 700 or more, but because of the roll, this is actually a lot because some of the volume was still spread in the June contract. This was a September contract, right? So when it's rolling, if you see over 500, then you can pay attention. So my point is, stop run, dumb money, fails, comes down, runs into a buy iceberg, turns around, once again, comes up. Here's another stop run. Once again, there's no real money pushing it forward. So if someone really wanted to buy here, if you're a big house and they were interested in buying, this was their green light, right? You had the stop run, and trust me, most big firms, big funds, they have this information. They've had this information for years. I use the example when you see everyone snickers when you see Goldman Sachs made money 198 out of 200 trading days last year, and everyone's thinking, well, because they got to be cheating, right? I'm not saying they're cheating. I am saying they've had this kind of information that we now have, right? So my point is, because they know these areas and they know the high percentage areas to be putting on trades and things like that. But the point is, when so my point is, if they see the stop run here, right, that's their green light. If they want to push this through, they could have just ripped this right through. Nobody stepped up. That is telling you something, right? Not that you can get short if you're following one of my specific setups, but if you're just waiting for the range, this is just giving you information. Stop run at the top of the range, iceberg at the bottom of the range, stop run at the top of the range. Then we kind of balance. And then I don't have the rest of it on Bookmap for what happened, but you see what happened. Then we moved down, 20 plus points out of this range. The reason is because there was a lot of activity taking a stand in this market. And when these icebergs were wrong, time to puke. So that's where you can start to glean so much more information than just staring at a bar chart. You know what is actually happening in the bars, in the area, right? So I like to use that example, the range, because so many people trade off ranges and breakdowns of ranges. It's important. How many guys have shorted a range and have it pop right back in your face and then it's above the range, right? You can short this break with confidence, knowing, hey, they had 2 different chances of the real money stepping up here on these stop runs, and all it was retail traders puking at the top of the range, and it couldn't get through. I am highly confident if we break down through here, we're going lower, especially because on top of it, this iceberg that took a stand, right? So you have everything that's confluent. Stop runs at the top of the range that wasn't real money, buy icebergs that took a stand that ended up being wrong, like we just covered. Boom, you put the trade on when it breaks, you can put your stop. I mean, I took this trade, I put my stop up high because I didn't want to, as we all know, the humanity has a tendency to bungee jump and screw everybody, then go. But the point is, I caught it, over a 20-point move on this break. So this was yesterday. This was the day before, the exact same setup. Again, when you start using this SI indicator, you're going to start seeing things over and over and over. And that all it's going to do is give you confidence, like, okay, let's rock. The minute this thing breaks, so here we go. We had move down in the buy iceberg. Move up, move back down, another buy iceberg. Move up, big stop run. No real buying behind it. Sells off, tries it again. There was no stop run, but it never got above here, right? So now you have your range. Now you know there's no real buying above. They've had multiple opportunities to step on the gas above, and they did not do it. This buying was just retail. I'm ready. And then I know the icebergs took a stand both times down here. If this breaks through, these guys, this big money is going to be puking out their position, puking out their lungs, right? And you're confident again because you didn't see any real buying up here. You know this is just stops, and then you know these guys are caught. They tried to hold the market up, and then this is what happens: straight down. Again, I caught this move as well. This was another 20 plus points. Right, so this was the first one. Sorry, this is the first one. And then these were back-to-back days, by the way. The same exact look, right around the same exact area. Now, if that's not telling to you guys, I don't know what is. I mean, this is as simple as it gets as far as, looking for trading ranges, looking for stuff like this in the range, and then knowing you are in good shape that if you want to sell, that was been no real buying involved where real money could have stepped on the gas if they wanted to. All right, so the rest of this, I'm going to get into actual setups with what I use. So I've moved over to the TazMarketProfile.com website. It is incredible information. That's this here. But I'm going to show you, this is real-time stuff here, but what I'm going to show you is when you start to layer in, and again, you can use whatever you want. Taz is the second best thing I've ever seen next to Bookmap, because it helps you understand where I mean, look at these support and resistance levels, right? So all this is basically drawing shorter term market profile boxes, those of you who are familiar with market profile, on a smaller time frame. So this is the 5 minute, 10 minute, 30 minute, 60 minute. So it helps you understand where we are. Are we in balance? Are we at the point of control, which point of control means most volume has been traded there. Resistance, support, it's important to know when we break, when we bounce off resistance, right? So my point is, when you use this or whatever you're using in conjunction with the Bookmap liquidity levels, the Bookmap SI indicator, then you become a lethal trader or a well-informed trader, right? So I joined them. This is on my website. If you click on the icon, you can get the stuff at a discount, the tools. I highly recommend them, and you're going to see them here in use here in a second. And then this is the other thing. I've been getting a lot of inquiries, and that's why I'm showing this here, because I know I'm going to get about 50 people asking me when I'm going to have my own trade room. Do I do stuff live? So I joined the We Trade Desk. It's WeTradeDesk.com. I'm in here 3 days a week, and this is kind of what it looks like. So I'm in here 3 days a week live, Monday, Wednesday, Friday at these times, and then Steve, who does exclusively the stuff I just showed you with the market profile stuff, he's in there these times. But the point is, I'm in here live 3 days a week, 2 times a day, showing you guys real-time setups like I'm talking to you now, but I'm showing you real time. And then also I'm posting setups all day long like I'm showing you in the room. So this is because I get so many inquiries. This is where you can find me. It's a great site. You can find the link on my website, scottpulcinitrader.com, to get into the trade room or get these indicators I'm about to show you. So here's an example of, again, today. I think all these are from today, just to show you, right? I mean, when you guys hear this, it should make you excited. Like if I'm just plucking out all these examples from one day, you can imagine how often this stuff happens every day in every market, right? You don't always get as strong signals in every market every day. Some of them are just dead, just like in a regular dead market. But so this is NASDAQ, right? So this move down this morning into 155 by iceberg, sell stops of 149. So again, I call this the double whammy, right? So you get the dumb money puking, selling, The dumb money being the retail trader. Again, don't take offense because I'm the retail trader as well. But when I say dumb money, I just mean it as they're not informed traders like the big money is, right? Just because the big money is more informed because they have more money. So anyway, they puke down. That's where you get this spike down. Again, under zero is negative. I don't see the reference graph in this example where you would see orange and could tell exactly, but I did it myself, and it was 149 sell stops, which is a lot in NASDAQ. Anything over 100 in NASDAQ is worthwhile. You want to pay attention to both stops and icebergs. So it was 149 stop run into 155 by iceberg right here, and you can see what happened. Boom, boom. The minute you see blue, you can get in. Your stop goes below here, and it was also in resting liquidity. So you not only have the buy icebergs, that's hidden liquidity, you had resting liquidity that it failed at. Then when you get initiative buying, I scrunch my screen up here a little bit, because this kind of looks confusing in this air pocket, but when you expand it, you can see it a little better. But the point is, this was a very relevant area. Before I get into this, what did that look like on TAS? Right here. So if you're looking at TAS, this is, again, the 10-minute, the 30-minute, the 60-minute. All these are market profile boxes drawn for those time periods. You can see it rip through, that's this, and then so if you're looking to short, you're like, okay, yeah, I want to short the break of this box, which is set up on its own. But you give it a second, and it's immediately, you're like, wait a minute, I'm not shorting anything. That was just a stop run. There was no selling. Not only was there no selling, there was buy icebergs there. That makes you aware, okay, even if it keeps you out of a trade, that's the same as making money if you're not losing money, right? You're not losing being short here because you know what happened real time. If you're just using TAS boxes and you're playing a breakdown, you may have gotten short here, and all of a sudden you're underwater, right? You're using this, you're like, no, wait, I'm not touching that thing. If anything, I'm looking for longs. There's your setup. Once it gets back in this box, you're long. Right here, boom. Once it gets back in the box, you're long. That was also longer term resistance on the 60 where it touched the exact price point. Again, when you start seeing confluence like this with real time, that is a high percentage trade where you're risking a little to make a lot. I mean, this is a 70-point move. Wow, when do I get out? Well, this is where you get out. You get out when you see the stop iceberg indicator tell you when to get out. This is how incredible this is. Again, this is not cherry picked from 3 months ago. This is today, right? If you just had this up and you weren't even using TAS, you just were waiting for this. Okay, when I see the double whammy fire off, I'm getting long, stops here, and I'm not getting out until I see something on the SI indicator. Okay, here I see Dumb and Dumber. Okay, now I'm out. 70 points. Literally, not using anything else. It literally is that simple. And the more simple you can make it, again, when you tie this in with what you guys are using, it's incredible, incredible edge. So we come up here, blow through 10,000. What was the blow through 10,000? Was that the big money? Nope, sure wasn't. That was stops, the dumb money, the retail trader. Puking immediately below, you know that, right? So if you're looking to get long, are you going to get long? I'm not getting long until this thing can hold and then start going higher. Then I'm like, okay, there's some real buying behind it. So this was confluent with the TAS area. So on the 10-minute, it was the prior point of control. Point of control is just the highest volume area. On the 30-minute, you see resistance, right in the resistance. On the 60-minute, right in the resistance. So now you're talking about using your tools. These are my tools, right? Or whatever you use. If you're looking for a short, there you go. I'm looking for a short. Here we are, right in. I'm going to show you an example of one of the actual trades. I didn't do a lot of trading today. Shockingly, it was incredible trade today because I was setting up for this webinar because that's how it always works. But I'll show you this exact setup. I think it was right at the same price, 10,000, 2 days ago, where I took the trade at the end of this. I think it's the last slide. But anyway, all I'm showing you here is using the stuff you look at and using the real-time volume to confirm or deny it. Hopefully that makes sense because it does not get any simpler than this right here. Again, you could have just traded this alone and made 70 points. So now we have, this is today. This is an iceberg wrong, okay? Like we showed in the crude example, right? Where are we at? Up here. This is when, remember I showed how the iceberg took a stand on the buy side and they got run over, and then when it retested, it was gone. Same exact setup. Again, you're going to see it over and over and over and over in every market. Boom. They tried big market orders selling. Oh, here's a surprise iceberg of 885 contracts. Weren't they surprised, those sellers? But they didn't care because it immediately went below. this is something to take note of. So if you're looking to get long here and you see the iceberg, you're thinking, yeah, awesome. When I see some big buying come in, I'm in. My stop go, oh no, that didn't happen. Right through it, right? Now, if you are this big trader, what are you thinking, right? Or big traders, you're thinking, oh, I'm in trouble, right? Again, I know this because this used to be me. I get my head taken off and then it runs and I'm just literally, I'm at the point of puking where I got to puke out 2,000 contracts. I'm begging, literally saying, please God, let this come back anywhere near this area so I can get out of some of these contracts, please. I have my risk manager calling me on the phone like I'm down 120 grand. So I'm dealing with that. I'm praying. This is real life stuff, guys. This is why this isn't hypothetical. I'm telling you because this used to happen to me, right? So we come back, the exact area. This is not a coincidence. It comes back here. Whoever got run over tries to get out as many as they can, gone, right? This alone is a setup. Buy icebergs, wrong immediately, retest, gone, retest failure. What that looked like on TAS, here we go, Confluent, this is E-mini, this is the E-mini. Top of the TAS 30-minute, top of the TAS, I'm sorry, 10-minute, 30-minute, and then right around POC on, I didn't put an arrow because it was right in the middle of this, but you don't have to have Confluence. If you have Confluence in all three, that's even better. Well, my point is you can have Confluence in one. If you get the signal, you're good to go. If you get it in multiple, now you're like, okay, now you can put on some serious size with very little risk and catch. You know, this was a 17-point move. Oh, and when could you have gotten out? Oh, how about this stop run right here? So this is, again, another trade you could have put on just waiting for a big spike in stops. Yeah, a stop run went off here, but it wasn't, this was not much. 362 is real borderline. You know, I like to see over 500. But when you see a sustained move here, so I didn't even look, this could have been an extreme tick reading too. Again, using whatever you use, you can say, hey, I'm in, I caught a nice move. Now the stop money is wrong immediately. I'm out, right? This is, I want to see, if I see these stops fire off, I want to see the big money come behind it and keep pushing it. This was just dumb money puking back above, rally back up. Again, this is not coincidental, right? And it doesn't have, it's not just happen once a month. This happens multiple times a day in every market. So that was the bottom here, right? So where that stop run happened, right here. Try to pierce through the TAS. Again, if you're looking for shorts, this thing goes below here, it turns red, you're like, okay, yeah, I'm awesome. Same with here. You're like, all right, I'm getting short. If you're just trading off this, right? This is powerful in its own right. But then when you add in, wait a second, I'm not getting short anything. That was not real money. That was just a stop run. I want to wait and see if it comes back and blows through. Then I'll get short. This would have kept you, again, out of a losing trade. That is, again, is just as important as having a winning trade on, right? And if you're looking for a long, you're waiting to the bottom of the support area, you see it blow through, you see it stops. The minute it gets back above, you know, this support line, you're in. Stop goes below this, which is confluent with, you know, that spike. Then you ride it, and now you're riding it back 15 points the other way. I mean, do you guys see the power in this information when you add it in with whatever you're looking at? This is, okay, so this is the actual trade I took. I think this was Tuesday. Again, this is what I get, and I highly recommend you guys do this too when you get Bookmap and get the SI indicator. Start screenshotting every trade you take, right? Every setup you think it is, every trade you take a screenshot of the Bookmap, take a screenshot of the actual, whatever bar chart you're using. Again, I use TAS, but so you can go back and review your trades and see, and the more you review it, it's just like practicing, right? It's just like practicing baseball or golf. I mean, you got to practice. The other way you can practice too is with Bookmap. They have a replay feature. I'm sure most of you know this. You can go in and replay this up to, you know, 268 or 512 times, even though I don't think it goes that fast. It goes at least 128 times, where you can speed up your replay 128 times in normal speed and practice. And you can actually put on orders as well to see how you would have done. And you'd be shocked, even when you know what's going to happen, you're going to find yourself, like when you don't see this stuff actually after it happens, you're going to find yourself like questioning, wait, did this actually sell off here? It's just very good practice. Even if you know what happened during the day, you're going to learn how to trade, you know, using this stuff too. So anyway, this is exactly what I was telling you. This is the double whammy. You got the stop run puke, big blue buy bubble. That's the stop run into waiting icebergs. So it was 100 icebergs. This was over 100 stop. I don't have that scale here. It was over 100 stops into another confluent sign, into resting liquidity. So again, the icebergs are hidden liquidity. This is resting liquidity. Dumb money, wrong immediately. I shorted here, stop here, and that's what you see here. which was confluent with the 5, the 10, the 30. And then also it just drew one on the 60. So you can see how powerful when you have this stuff, when you use real-time volume. This was like a 50-point trade, 60-point trade in 2 seconds. And I mean, I'm being sarcastic, but it was pretty damn quick, right? You can see this. And then when it broke through, it was even more when it broke through this support. So this is what I'm showing you, like how you can use this stuff in conjunction with your real trading. I mean, it doesn't get much clearer than this stuff, especially when you start to see it every time, you know, for days and days and days. So then that's basically it for my examples. These are my settings, because I always get questions on that as well. Again, I change the colors so I can, they're easy for me to read. I have round 0, exponential. There's 3 different settings. There's the sum, exponential, and reset. Exponential and reset are pretty close. Again, read that handout that Bruce put in the chat. If you click on the MBO indicator blog, it explains all this stuff to you so you understand what you're doing. But again, I use exponential. I'm just showing this so you guys see what I use. This is my liquidity tracker settings. I use black for the imbalance. Again, imbalance is just the delta, the difference between the ask and the bid. I do not look at either one of these. It's confusing to me. I don't need to see that. I need to see the difference. You can change this to whatever you want. You can even make it even more fine. You'll make it even more microscopic, make it 5 if you want. I use 10, and these are defaults too. And then I don't even know what this means. So again, a lot of the Bookmap stuff I'm not that proficient at, but I don't need to be, right? I use the example, you know, when you want to turn a light on, do you need to know how it works, or you want to be able to just get light, right? So, you know, most of the stuff I understand, but some of the stuff I don't, and I don't need to right now, right? I don't need to be cluttering my mind with all of this stuff. I'm not an algorithm guy. I'm not a programmer. I care about this stuff, right? Making money trading. And these are my bubble dots. I mean, my buy and sell bubbles, these are the settings I have here. Again, I changed mine to blue and red to make it easier to read. I use volume delta, 3D bubbles. This is all basically default here. And that's it. Any questions, Bruce? And then also, I'll put this back on here. So again, We Trade Desk is where I'm at. Go to my site, you can get those indicators I was showing you that are absolutely incredible. Second best thing I've seen next to Bookmap. And then here's all my contact information. I do mentoring. As you guys learn, if you want to do one-on-one stuff, you can contact me here. There's my Twitter. I post. I'm posting less and less now because I'm in this trade room now, and that's taking all my time. Where I want to give the members the benefit of everything of what I'm seeing. But this is where all my information, like Book showed. And then if you click on this link, and it's also on my site, you'll get a discount on all the Bookmap stuff as well. All right, so that was a lot of talking, Bruce. If you got some questions, I'd be happy to answer them.
Yeah, and I've been answering most of them, guys. There's just a handful that I have not gotten to. All of the links that Scott is just showing there, I just put into the chat, so you have them. So you don't need to copy that down. You can click on them in the chat box there. They're also available on that PDF that is in the handouts folder that you can download. It also has other links in there. So a lot of the questions that you guys are asking can be answered through the documentation and the links there. So maybe explore around a little bit. And this is really exciting times. I mean, this is a new thing, this market by order data, and it's giving us a pretty incredible transparency into the market that was not available before. And this is an edge. So, look into it here. And that's why we had the previous webinar as well about just about MBO and Stop Iceberg Tracker and Bookmap. So you can watch that as well. The link is also in the chat for that previous Futures IO webinar, and I can put it in right here again right now. So there you go. And then let me get through some of the questions here for you, Scott. Hey, Robert, I think he's been showing several actual trade examples, but things that he took. I don't think you're not trading right from the Bookmap chart, are you? I think you're just getting the data and then transacting somewhere else. Otherwise, you could show the all the trade data there. So this was kind of asked previously, but do you keep track of all of the icebergs from previous sessions? So you kind of have like an idea of you know, the amount of transactions that made a big move.
Right, and that's what I covered, right? So I'm about to put out a course on it, so I've done all the work for you over the last 3 months, where I literally will have like 18 different futures markets, and you're going to know that that's what I meant by thresholds, right?
Gotcha.
So you're going to know what's a lot in the E-mini, so over 700. You're going to know what's a lot in crude, over 100. So I do it for all the markets, and then I give you my specific setups, so like the Dumb and Dumber, the double whammy, the stop and hold. So I got 6 or 7 different specific setups that you're going to be able to access too. But again, I mean, yeah, it'll be helpful for you to have my stuff, but once you get it, you can start coming up with your own stuff as well. That's how powerful it is. I mean, I love using the analogy. If I put my daughter in front of the screen, you know, and I show her, I just explain a couple things to her, and I say, okay, when this is really blue, what do you want to do versus really, and when you see it really orange, what do you want to do? Well, Daddy, you want to be buying when you see the blue here, and then you see the blue here, and then when you see the red here or orange here, and you see red here, you want to sell. It's literally that easy. I mean, I shouldn't say easy, simple, right? Let things be simple. You don't have to make things confusing. You don't need 55 indicators. I look at some of these educators, I'm doing air quotes on Twitter, at some of their charts. I mean, how anyone makes money trading off of 50 different things on their chart and can't make a decision is beyond me. Make it as simple as possible. Again, I've showed you multiple instances where you can just trade off a Bookmap alone, then add 1 or 2 things, add what you like, your moving averages, your tick divergences, ADD divergences, the advanced decline line, whatever you look at, it doesn't matter. I mean, I told you I use Taz, and I highly recommend you guys try it because it's incredible, but you use whatever you want. Just make sure the volume is confirming your areas.
I think that's a really, really huge point. You know, in the Bookmap daily webinars, advanced webinars, we make that point again and again, guys. This is not a signal service. Scott is using it. He's reading the order flow first. He's looking at the heat map. He's looking at the transactions. He's looking at certain levels in the market structure. Then he's confirming with the confluence of stops and icebergs there. Wow, you know not only the order flow, you know the order types transacting in those areas, and that's just incredible transparency.
Exactly.
So let's see, do you trade this a lot on crude as well and have been successful with it? I guess you showed some examples already.
Yeah, one was an example crude. I trade most all of the markets. I mean, some of these, like, I mean, I'll show you here. So, you know, I'll funnel through these markets all day long. I mean, but I have everything on here. So copper, corn, just like watching paint dry, I have fun trading that. Silver, bonds, natural gas, all the currencies. So this is 6E, Aussie, British pound, Canadian dollar, Japanese yen. So any of these markets that you guys trade, you know, I follow these. I have all the thresholds for the lean hogs and the cattle. I mean, I don't even know which one's which because I haven't traded it yet because I want to be proficient at what I'm seeing here. But the point is, this stuff works in any futures market that is on the CME. And then that's another question I get is, well, is oil on the CME? I thought it was NYMEX. It is NYMEX, but they're all under the CME umbrella. So the NYMEX, the COMEX, the CBOT, they're all under so any products that trade on those, you can get this, you'll get the MBO information from Rhythmic only, right? So you got to get Rhythmic. Again, you can get that on the Bookmap marketplace. But I mean, you can just see here, I have all the futures markets basically. I mean, you can even put more on, and then I follow. This is the DX feed through Bookmap where I have a couple of the ETFs that helps me with liquidity levels. I've shown that multiple times in webinars as well. But for futures, you can watch all of them, and you will learn, you know, what the thresholds are on your own. But I'll also have something coming out here shortly where you can purchase it and just help you kind of speed up your learning curve.
Yeah. So another point. It's been a few different questions in here regarding your settings. If you can show your settings for Stop Iceberg and Liquidity Tracker.
Yeah. So that's what I had here. So this is my Stop Iceberg. Again, you guys, you know, we don't have time to go into all this. This is technical. You can learn what this is. Just click on that PDF that Bruce put up there. Click on that on the blog, it says SI indicator, or Google SI indicator blog, Bookmap blog, and you'll find it as well. It explains what the different settings are. So here, I'll show you here just quickly. So when you click in here, click in here, click in here, you get 3 different settings: sum, exponential, reset, right? So sum basically just keeping track all day long, like a running total. That doesn't help me for what I want to see. Exponential is kind of like, you know, at the minute, but it has like a decay value, which you can read about. And then sum is literally like, or I'm sorry, reset is literally like the per minute, right? So I have it 1 minute. So every minute it'll reset to 0. So it helps you see spikes. This is helpful too. I just like the exponential. It's a little more smooth. And you can read why. Again, that's not my gig, but you can read why. But those are the 3 settings for that. And then I also showed the my other settings. And then this is for the liquidity tracker that I talked at the beginning. Very basic stuff. This is all, you know, what it's showing you is just basically the liquidity in the order book. Bid versus ask. Imbalance means the delta, the difference. Ask, bid. You can have all of these on there. If you want to confuse yourself, great, have them all on there. That's too confusing for me. I just have this. And then here are these are the settings I use. You can play around with this stuff. I don't even know what this means yet. I don't need to know. I know what I'm looking at works, and that's all that matters to me.
Okay. Also, another point I need to make. There was a question about the icebergs, there's. If you look at, so let me just take a moment here. If you look at the Global Plus version of Bookmap, there's Global and Global Plus. Okay, the difference in the price between those two is the add-on indicator package, and we've had an iceberg detector for years already, but it is an algo. It is reading the synthetic or heuristic icebergs. Okay, it is different. And it works for CME as well as, like, you know, other futures exchanges, okay, Eurex or, you know, ICE or whatever it is that you're looking at. The stop iceberg tracker is a very different thing. It is for CME native icebergs only. So it is an order type that other traders are paying extra for, larger players. They are co-located next to the CME exchanges, and they are paying extra for this. It is a native iceberg only for CME, but we can identify them with 100% accuracy. Okay, the synthetic iceberg detector that we already had for years gives false positives. Okay, it depends on so many different factors. How that data comes into the order book, the different data providers can cause that thing to be very erratic in some cases. You know, if you're looking at like Interactive Brokers data versus Rhythmic, for example, you're going to see some big discrepancies. That's the difference between the iceberg detectors. It is a very specific thing. It is market by order data, and these are native icebergs to the CME only. Okay, let's see what else here. Oh God, I don't know what else we had here. Let's see. What about the NQ? Would you have some thresholds maybe for the NASDAQ E-mini?
Yeah, I showed that. I showed.
Oh, you did. Okay.
I'm
sorry.
No, that's fine. But I showed that was one of my the trades that I put on. Again, I didn't take any trades today because I was setting this all up because I wanted to show real-time examples. But this is NASDAQ right here, right? So this is the E-mini NASDAQ. Thresholds, like I said, over 100 are important to take. You can see like those are the biggest spikes, and everything else is like this. So again, you want to pay attention. You're only going to get 2, 3, 4 a day, which is, I think, even more telling, right? So you know when you see them, they're very relevant, right? You're not getting a signal 45 times a day. So that was that, and then the actual trade from 2 or 3 days ago. I can't remember now. It all blends, but this is it again. You had over 100 sell icebergs. You had, this was well over 100 stop run, the double whammy I call it, dumb money into smart money. That was here. This is the NASDAQ as well, and this is what it looked like on the TAS that I trade with the resistance levels.
Yeah. So I'm sorry, I was so busy answering all these questions, like in a flurry here, that I really wasn't listening to it and going through a lot of the examples with you there, Scott.
Oh, no problem. I was meaning it towards the person who asked. I mean, that's
Yeah. No, well, yeah, they probably already knew that after
okay.
you had probably answered it.
Okay, cool.
So let's see. All right. I mean, most of these guys they've been answered in some of the previous questions. So take a look at that. Yeah, some nice compliments in here with the practical examples, Scott. So, the difference between Global and Global Plus is the add-on indicator package, okay? This new MBO bundle is sold separately on the Bookmap marketplace. Okay, it's a very different thing. And our whole intent here was because we got so many different questions or suggestions and pleads to develop new features in Bookmap. We decided to open up the architecture and let you guys code whatever it is you want within Bookmap. It's Java-based, and now there's a marketplace for it. So you can go and buy others, or you can even sell your own indicators there as well. Okay, the gold rush is on. So, get in there with that low-hanging fruit if you want to develop like scale in and scale out strategies, etc. You can even offer connections to specific exchanges if you want to code those as well.
Yeah, the other thing I forgot to cover, for you guys, for the TAS stuff, this stuff that I was showing you that's on my site, this is not affiliated with Bookmap at all, right? So don't send a bunch of questions to Bruce about this stuff because he has no idea. He doesn't. Has nothing to do with Bookmap. This is my stuff that I use that I'm now affiliated with because I liked it so much. I joined them because again, it's the second most powerful thing that I've ever seen next to Bookmap. So, and that's why I use them both in conjunction. And that's why I represent both because I use them. But the point is, please do not send Bruce a bunch of questions about this stuff because he has no idea. And if you have questions, send them to me. You have my contact info.
So some questions about your course and when it will be available and costs.
It'll be available here in the next couple of days. I'm hoping. I've been working on it for a while now, and I thought I'd have it done, but then I had some stuff come up this week. Don't know the cost yet either. I mean, it's not going to be. It won't be too absurd. I mean, it's going to be pretty general, probably in line with my other courses. One of them. So I have a bunch of courses, not a bunch. I have 3 courses on the Bookmap marketplace, which this will be on as well. Then I'll be offering it through the TAS site and my site too, but. Those courses range between $350 to the full NASDAQ course in the Bookmap marketplace that's up there right now. That's $799. So it'll probably be in between that pricing range. But again, it's this information is incredible. If you can learn to use it, you're going to be making some money trading. I can promise you.
Okay, so one more quick thing here. Like you guys are saying that I'm sorry, I guess the link was working the other day. I tested it many times to that marketplace in the MBO bundle. I just put it into the chat, but you can also just search for Bookmap Marketplace and find it. All right, on Google or whatever. All right, I think we covered everything, and I'm sorry if I didn't get to your questions, but I think I got to the majority of them.
Any questions? Again, contact me. There's all my information. The Twitter as well, and then I do the one-on-one mentoring. If you guys want to individualize, mentoring, I do that. And then just go to my website. You can find out all this stuff.
And you also offer right on the Bookmap marketplace as well. Your educational products.
Right, exactly.
Yeah.
Which this new product will be on there too as well in the next couple of days. I'll send out an email. There's a thing on my website, Bookmap might have it as well, where you can put in your email when new information is available, and I'll send out a mass email when it's finished, which hopefully isn't by the end of the weekend. I'm hoping.
Okay. All right. Well, any final? I guess Terry, the recording will be up on the Futures.io webinar website maybe within the day or so.
Yeah, it should be up inside the next 24 hours.
Okay. Yeah. And then any parting words, Scott?
No. I mean, hopefully you guys see the power of Bookmap alone, and then now with this new indicator. I mean, I've been in the market. I've been in trading markets, futures markets for 20 years, and I've never ever seen anything more powerful, more reliable, and that puts us all as retail traders on the same playing field with the big money and knowing what the big money is doing, because that's what drives the markets. You know, lines on a chart don't drive markets. Volume by big money, that's what drives the markets. And this is what's going to help you tremendously, like we've gone over.
All right, guys.
Okay.
Thank you for the webinar, the information, and for spending some time with us this evening.
All right. Thank you, Terry. Thank you very much.
Have a good night.
Yep. Thanks, Scott.